We work hard as physicians to take care of the health and well-being of our patients. But when it comes to our money, do we have the same condition of care? Probably not. Let's change that together. Welcome to the Financial Freedom for Physicians podcast, where we'll fight and advocate for your financial literacy. As always, I'm your host, Dr. Christopher Liu. Thanks for being here. Let's jump into the show. This week's episode is sponsored by CityVest. CityVest has quickly become the most popular and best way for doctors to invest in top-performing real estate private equity funds that are usually reserved for institutional investors. This unique access to investing in these institutional funds is available for the first time ever through CityVest's easy and secure online investment platform. CityVest does the hard work of conducting due diligence and vetting the investments. They even get a third-party due diligence report that is posted on their website. As a result of aggregating a several million-dollar investment amount into their access funds, CityVest gains access to investing in the institutional investment and is able to negotiate better investment terms such as a 12% preferred return. You can check them out at cityvest.com or go to the link in the show notes below. Welcome, everybody, to this week's podcast episode for the Financial Freedom for Physicians podcast. I'm your host, Dr. Christopher Liu. And as you know, I talk about 4 pillars of freedom: time, financial, location, emotional freedom. And the podcast has grown since 2020. Initially had physicians that are guests in the audience, and now it's grown and expanded. So now hopefully both the audience and the guests can learn from each other. So in that light, I have Dr. Chen, and she's the host and founder of The Real Estate Physician, and she's her unique selling proposition. She's in the niche of real estate syndicates. So today, and I know it's a very popular field for physicians. So we're going to talk all about real estate investing, passive investing. So Cherry, welcome.
Yeah. Hey, Chris, thanks for having me on. And I definitely resonate, with those 4 pillars and values you mentioned. And it's, the same exact ones actually when I think about investing. So I'm really glad we align on that. Hopefully we can have just a really great conversation today.
Yeah. No, we had, we know you had a couple of, you do the Real Estate Physician. It's a newsletter, a blog, a lot of information and education for physicians interested in real estate investing. And what's interesting is you're on the passive investing side. So we'll get more into that, but tell us more about your background, your bio, and how you got started.
Yeah, so I'm an internal medicine hospitalist. So it's about 7 years in. It feels a lot longer sometimes, but I started, basically investing or looking into investing first year as an attending, right? And it's really self-taught, self-guided, because I'm sure you and our listeners understand we weren't taught. So everything with medicine has been so straightforward. Spoon-fed to you. Of course, we have to study, but it was a very set, path, right? But that didn't involve anything about finance or investing besides the 401k, which is what I was investing into. But it really just started with being a curious person. And I was just, wondering, hey, is there anything else besides my 401k I can invest into? I was getting paid as an attending. I was like, okay, this is extra cash. Well, what can I do with it after, putting into my 401k? So it really honestly started with that. And then understanding just real estate intuitively. I had never invested before, and so having lived in apartments through med school and residency, it was I think we can all understand it, but I really didn't know anything beyond getting a rental and put it on Airbnb, and that's kind of where I just started learning and devouring everything on the internet, basically.
Yeah. I know before we get, we'll get into this question is, real estate, especially real estate investing and especially syndications are very popular for physicians. So, in a nutshell, because physicians are a very unique cohort because they're high income earners, but tell us, why the specific advantages of real estate investing over, a 401k or the equities.
Yeah, and honestly, I didn't know any of that before I started investing even into real estate, into my first, syndication. But I would definitely say it's, rather than look at, hey, what are the specific returns, really understanding the asset class as a whole, but also understanding yourself, right? So why I personally enjoy, into investing into syndication is I like to remain passive. I working as a hospitalist. I don't want to, dig into every market and have to dig through all this data or underwrite these deals, talk to brokers 24/7 to find that one property, right? That might take hundreds, if not thousands of hours. And then that's just the beginning, right? And then after you get a property under contract is the management. You can have a third party, but it doesn't relieve you of all of your responsibilities, right? And so I wanted to be as passive as possible. And that's why syndications make a lot of sense for physicians because you have the capital, you want exposure to real estate or diversify from stocks, but you don't want the liability or to spend all the limited amount of free time you have into hunting for real estate deals, right? Some people might love it and that's great, but I wasn't that type, or I learned I wasn't that type. And then just the investment itself, most of my investments or what we share are apartment buildings, right? And so you do give yourself, in my opinion, less risk when you have 200 units versus a one unit by one occupant, right? So we can definitely dig into the more details, but just from a broad level view, I wanted to be as passive as possible and understanding ways to decrease the risk of my investment, basically.
Yeah. Yeah, that's a really fantastic introduction. And a couple of questions was, for example, there's always been the debate in the physician community between, which produces the greatest returns, either the stock market or real estate. So we'll get into the specifics of like why, what are the advantage of real estate over the equity markets.
Yeah, and I think especially I feel like as I've invested many years now, when I'm looking at returns, certainly most investors and me personally, when I first started out, was like, okay, what is my percent return, right, or whatever, cash on cash or my annualized return, but also think of it more broadly as a physician is, well, what is the return of my time, of my effort, but just broadly speaking, I am not a stock market or equities expert, and you can definitely correct me, but it is just comparing some of the main, I think, generalized principles of the stock market is much more liquid. So it can be, some people say it's more volatile or unpredictable, right? I can wake up tomorrow, it can be up 10%, 20, 30, or it could go the other way, right? Versus real estate, just by nature, you cannot sell it, the next morning, right? So it is more illiquid, but also the same flip side of the coin is it is more stable or predictable, right? Depending on your business model. So that's one way. The most other more attractive way is just some of the tax benefits you can have by just being a real estate investor. That applies to most all real estate investors in different fashions, not just if you're in a syndication versus your stock portfolio is, not as tax efficient. And those are just the general, basically tax benefits the government has for people who invest into real estate. So you're not special if you're in a syndication, but we can dig into that as well. But I would say those are the two most common, without like talking about, okay, what is the time it would take me as a physician if I wanted to be active real estate or do it on my own. And that for me is much more important, especially as I invest more, or as we get older or have family, is what is the return on time and how what is like my headache, my sanity when I'm in an investment. I hope it definitely enhances my life rather than takes away from my life. So those are just some of the other things I consider.
Doc to Doc is a personal lending solution designed by doctors for doctors. We understand that doctors' financial situations change faster than an insulin drip in ketoacidosis. And we also understand that doctors are the most reliable borrowers in the world. Through our proprietary algorithm, we're able to provide personal loans at great rates with amazing flexibility because we take into account your schooling, your specialty, and where you are in the medical journey. Doctors come to us after they've matched into residency, and we loan for all sorts of personal reasons, from credit card debt consolidation to family expenses and medical bills. We speak with everyone who applies for a loan and offer fixed interest rates and flexible term options without prepayment penalties. If you're a physician looking for a personal loan, fill out our application form now. It only takes 3 minutes, and we'll get back to you with a decision within 24 hours.
I've been talking a lot with my physician colleagues, recently, and they're, just with the market volatility and, companies can go under, and especially in this time, hard assets, real estate, gold, all of these things are very nice to hold because, it's physical and tangible. So, and you control it. Two questions I had. The first question I had was, so, you can do active, which is like essentially being a landlord, which, a lot of physicians shy away from. It's not a really good return on your time or capital. So, if you, for example, if you want to invest in syndications, which is a passive way, what's the difference from REITs? Like, they're both passive, right? So tell us about that.
Yeah. And I've actually never invested into a REIT, real estate investment trust, but you can, buy the stock, right? Hopefully I'm saying it correctly because I just don't do that. But, and then inside of it, the company might hold shares of apartments, right? So when you look at it as an investor, I think you see, okay, I'm investing into apartments or self-storage, right? But because of the way the investment vehicle is created, you have different benefits that pass down or do not pass down to you, right? And so whenever you invest into a REIT, you purchase it, it is more liquid, right? Because you can sell it tomorrow if you wanted to. You don't have to hold it long-term like real estate, but then you don't receive the tax benefits of as if you were actually an equity owner or holding the real estate yourself. You're holding paper shares of a company that then purchases these shares. So you don't get any of the tax benefits. Versus when you invest into a real estate syndication or go purchase your own, properties, you actually hold equity. Therefore, you receive the tax benefits that do get passed down to you as an equity owner. And when you invest into a syndication, as a passive investor, all of those benefits do get passed on to you. So that's just a good, nice benefit, right? Of that. So that's one of the main differences, short of understanding the liquidity and illiquidity of REITs being on the stock market.
Yeah. I think the number one depreciation is like phantom income. So it's it's almost like you're making money, and it's you can hold a lot of real estate, and on paper you look poor because of all of the depreciation and the tax benefits. So go ahead.
Oh no, yeah, and that's I was like, especially when I first heard it for the first time, I was like, I don't know what that means. But just why real estate, why many people hold it, outside of stocks or whatnot, is it's just think, well, if I make an investment, if I actually get to keep more of my money, as we understand as doctors, if I actually got to keep what my my W-2 salary was, you'd have more money, right? And so those tax benefits you get as a real estate investor basically just allows you to hold on to more of that money that was coming back to you rather than it being taxed away. Yeah.
The other question I had was a lot of so this question between direct active and passive, and do you think in your experience, because I started out with direct active real estate investing, and that really taught me a lot of business skills, but it took a lot of time. Can physicians just go directly towards the passive side, or you think it's better to own one or two properties just to get a good feel of it and then move into passive? What are your thoughts on that?
Yeah, I think it's definitely, personality specific and, what your goals are. I actually think, personally, I would say it's the other way around, where I think it's easier to go into maybe one or two passive deals, see how you like it, see how generally real estate works, and in that process, educating yourself, right? And then if you're like, hey, I love, reading these reports of financials, I love reading what the property management is doing, I want to go do this on my own, right? So I think it's otherwise the other way around. But it's it really just depends, because I see several physicians who go out and then purchase several rentals within a year, right? That's kind of, I think we're grateful or blessed in that way, where we have the capital, you can get the loan. You're not saving up 3 4 5 years possibly to get a loan, and so I think in that way we have much lower, I guess, obstacle to go purchase. But I think then you need to really understand, but not only purchase, right, but knowing you're actually buying the right kind of property, right? It's different to win a property versus the cash flow, the management, the operations. And when you are a passive investor, like I mentioned, it's usually these 200 unit apartment buildings where the property itself can support a third party professional management company who, you have a leasing agent, you have maintenance, you have marketing. The property can support that because it is just much larger scale, right? And so I think that's easier, because then you can learn from all of that as a passive investor, ask as many questions as you want, rather than jumping. And most of these syndications, the minimum is 50,000, which might be less than what you would be putting down, on a rental, for example.
Yeah, yeah, yeah. Those are all good pearls and tidbits. For someone that's really someone who's listening to this and interested in syndications, you mentioned, when you were starting out, some resources. What are some resources or books or blogs or, YouTube channels that really helped you?
Yeah, so I basically just like literally, I'm an internist as well, so I like to like pretty much learn every little detail. But I basically just like read everything I could get my hands on. Podcasts, I love podcasts, so that was a great way for me to learn. And there was something really specific, for physicians, maybe one or two resources. So that's kind of what I built, the real estate physician platform off of. But I would say, like, most people would say Bigger Pockets is just a great resource because it's very community friendly, education friendly, and it covers just such a broad range, not only syndications, right? And so I would definitely say start there. If you're brand new into real estate, I think that's a great resource.
Yeah. And there's so much. I mean, podcasts, YouTube. I mean, you can
Yeah.
go on this.
Yeah, it's overwhelming. It's definitely overwhelming. And I think that's why it's nice to have, whether, like your podcast, right? It's directed toward physicians. The real estate physician platform is directed. I kind of basically created of what I would have wanted, and helping physicians answer questions in 30 minutes rather than you coming home, you're busy, and then you put it off for another year, right? And so it's just to make it easier for people who are in the same space as you.
Yeah. And then, yeah, and then now you meant, because really what's interesting is you created a platform, the real estate physician. I know you've done syndicates in the past, and a lot of people are interested in learning more about you, following you, visiting you. How can they do that?
Yeah, I mean, the easiest way is just therealestatephysician.com. And whenever you sign up, there's definitely like more information there. I wrote a 72 page guide for physicians. So if you're first time looking, the whole point is not to convince you that syndications, are the best thing, or you hear other people talk about it, so you have to do it. The main point was this serves as a primer, and you should definitely be able to finish it within like 2 hours. And then after you finish it, it's supposed to be, hey, okay, it makes sense. I think it makes sense for me. Let me learn a little bit more, or to figure out, hey, this does not make sense for me. Then you don't jump into investments that you don't understand or just are not a good fit for you. And then I connect with all of our investors on the phone because I really want to get to know everybody. And so that's a great way to reach me if you're interested.
Yeah. And for all the guests and audience listening, Dr. Chen's resources links will be all in the show notes. So one final question I had for you, because especially during these times, the number one question I get from clients and people is what are your thoughts on the housing market, especially with this economic uncertainty, recession? What are your thoughts?
Yeah, that's a hard question. But I would say so. I would say definitely, real estate has, and I believe is, local, if not hyper local, right? So to really I would say, sift through the data in an educated way, right? Because there's clickbait just across, all platforms and in all the areas, right? And so you see real estate recession, but what state, what market, there's the US is so big, right? So I would definitely say read everything with a grain of salt, but also, talk to people who are actually doing it, right? Rather than a clickbait headline. Like, for example, we have a lot of properties in Texas, right? And so, for example, whether it's recession coming up or we are in a recession or when COVID hit and everybody thought, it would be a disaster, right? In fact, all of the housing fundamentals actually improved and strengthened, for example, in Texas through COVID, because there were trends such as people moving, jobs moving, headquarters moving, that happened before COVID and in fact strengthened more through COVID. So we saw rents go up, in fact, in Texas, right? When people thought it would plummet. So one, it's especially real estate is, I would say, hyper local, and two, to really differentiate between what you're reading, between the data and how it's presented. And if you're confused or don't know, like most of us, because we're busy, is to ask somebody who's actually doing it, right? Or go on Bigger Pockets. That is, if you see the whole forum people refuting the data or saying something different, then it's definitely worth another look. And then nobody agrees, right? So I would say talk to somebody who probably has more experience than you, right?
Yeah. Those are really good pieces of wisdom. So, Cherry, it's been a great discussion. I really enjoyed talking to you, and I know a lot of people will come to your website, hear more about you, all of your offerings. So, and thanks so much for sharing your knowledge and all of your expertise.
Yeah, no, thanks for having me, Chris. And definitely reach out with any questions, whether you're first time or invested before. I'm always available to answer questions first.
I'm excited that you made it for another episode. You are truly the best. If you've been following the show for a while, you know that my passion is to bring you the education you need to find your path to financial freedom. Please come back week after week for new content, new resources, and great guests. Until then, if you haven't already, please be sure to check out the website, www.drchrislumdphd.com, for more support. I'll see you next week.